Good afternoon, everyone. We are happy you could join us for Bigbank's investor webinar. Today, we're hosted by Bigbank's Chairman of the Management Board, Martin Lents, and Member of the Management Board, Argo Kiltsman. We will start the presentation with an overview of Bigbank and its public offer of subordinated Tier 2 bonds and continue with a live Q&A session. If you would like to ask questions to the company during the presentation, please just use the Q&A section underneath the presentation. But now I'm handing it over to you guys.
Thank you. Hi all, nice to see you all here today on our presentation of our public unsecured subordinated bonds issue. It's the third series under this program. The total amount of bonds we can issue under this program is 30,000, and under that, as said, we are doing it third time. Before we start, also a small legal disclaimer. This presentation and also all the materials presented here should be considered as advertising materials in the terms of prospect. And if you do your investment decision, then this decision should be based on the prospect, on the amendments of the prospect, which are available both on our webpage, investor.bigbank.eu, and also on Estonian Financial Supervisory Authority, www.fi.ee. This presentation is meant for the investors in the Baltic states. So all the investors from Estonia, Latvia, and Lithuania can participate. The materials are not meant for presentation outside of Baltics and also not to be distributed in US. Today, we will also use forward-looking statements. We talk about some forecasts, prognosis, we predict the future a bit. So in all these terms, these statements should be taken as forecasts or predictions. And of course, as always about the future, we cannot be sure about the things happening exactly as we would like to. So they cannot be taken as facts. But to start, as said, my name is Martin Lents. I'm the chairman of the management board of Bigbank AS. I have been working in Bigbank since 2013. Started as head of Estonian business unit, meaning I was responsible for our activities in Estonia. Have been leading the group marketing and sales, also product management, debt collection throughout different years. I have been the member of management board since 2017. And I have been acting as chairman of the management board from 2019. And here with me is also Argo, so maybe Argo, you will introduce yourself.
Thank you, Martin, and hello, everybody. My name is Argo Kiltsman. I have been working in Bigbank for over 12 years by now, and have been in many different finance area positions. And starting from 2017, I have been head of finance area, and starting from 2019, I have been also a member of the management board, responsible also for finance area. So with that short introduction, I give word back to you, Martin.
Thank you. And to start, I would give you an overview of our operations. So Bigbank is Estonian bank. We operate also in Latvia, Lithuania, Finland, Sweden, Bulgaria, and on cross-border basis, we operate also in German, Netherlands, and Austrian market. And what is the difference? If in the Baltic, Scandinavia, and Bulgaria, we are also physical offices, and our people work also in those countries. Then by the legislation of cross-border services and how it is licensed, you cannot have physical employees working from these countries. So meaning that our German, Austrian, and Netherlands customers, we service actually from our offices from Tallinn and Tartu, where people from those countries are working and are helping our customers in their problems, questions, or doing the KYC and other processes. If we look some key facts about the bank, then as of at the end of second quarter 2024, total assets of the bank were over 2.6 million euros. We had a loan portfolio slightly less than 2 billion euros. We have more than 160,000 customers. Our deposit portfolio is over 2.2 billion euros, and all our customers are serviced by a bit more than 500 employees. Our structure looks like here brought on the left side of the slide. The bank is owned by two Estonian individual persons, Mr. Parvel Pruunsild and Mr. Vahur Voll. Both of them hold 50% of the shares. Bigbank is operating in Estonia through the mother company, Bigbank AS, and in Latvia, Lithuania, Finland, Sweden, and Bulgaria through its branches. And as also told on previous slide, then in these branches also we have our employees. The German, Netherlands, Austrian market is serviced through Bigbank and through its employees working in Estonia. The bank has also subsidiary companies, and those subsidiaries are mainly dealing with banks' real estate investments. These investments include office premises where the bank itself is operating, but also we have office premises which is rented out, and also we have like some shops as tenants. And the other side of our investments is in agricultural land, which we own both in Estonia and Latvia. What else? Our supervisory board consists of 6 members. Mr. Sven Raba is the chairman of the supervisory board, and then we have Mr. Vahur Voll, Andres Koer, Mr. Jaan Liitmaa, Mr. Juhan Jääger, and latest supervisory board member is Mr. Alari Aho. Talking about the product range of the bank, then we can divide it into 2 main business lines: retail banking and corporate banking. So if you look at the retail banking and private individuals, then for them we do offer different loans and leasings, and also we finance ourselves through the deposit products, either than fixed term deposits or saving deposits. On the loan side, I believe Bigbank is historically known, first of all, regarding a consumer loan provider, but today one of our main growths in the retail banking is coming from the housing loans. If you look at the corporate banking side, then we do provide different types of investment loans, credit lines, development loans. Also, our customers can get the different leasings, either equipment leasing, car leasing, lease a tractor, I don't know, different types of leasings. And as also by private individuals, we offer our corporate customers also different types of deposit products. If you talk about the history of Bigbank, then the bank is more than 32 years old. Yes, the banking license itself we got in 2005, after which we had quite wide growth. We started the cross-border services in German, Netherlands, Austrian market, and it gave us a good source of financing the loans. In 2014, 2015, we changed our business model, and if until that time the main lending maybe was done for the more riskier customer segments, for the customers who not always got a loan from some other banks. Then from 2014-15, we started to compete with universal banks and with customers' home banks. And this has been a successful road. From 2019, we are active in corporate banking. 2020, we launched residential mortgages, housing loans. And during last years, I would say the maybe key points have been different bond issues on the Nasdaq Baltic bond list. And also we have put a lot of attention to the different deposit products, launching those products throughout all the countries we do operate. Also in 2022, we started offering credit cards. In the second quarter of 2024, we had more than 80,000 credit card transactions. So it is one step towards the bank operating in the payments segment. And now, Argo, I would give maybe the word to you to give an overview of the financials.
Thank you, Martin. And let's indeed go over the main financial figures. On the first slide regarding financials, there is a profit loss statement for full years 2022, 2023, and 6 months for this and previous year. If we start from above, look at net interest income, we see that from 2022, 82 million euros, we increased it to 98 million euros in 2023. The growth was very big, 19%. If we compare now net interest income of 6 months this year to 6 months previous year, the growth has been from around 47 million euros to 51 million euros. So it is 10%. The growth has slowed down, but still it is growing. Why the growth has been slowing down? There are actually 2 kinds of reasons this year. One is that we are more concentrating on our strategic products, which are corporate loans and housing loans, which are having smaller interest margins. At the same time, there is a decrease also now in the interest rate environment, meaning our Euribor revenues are also going down compared to last year. So this means that although our portfolios, which we are coming to shortly, are increasing, the growth in net interest income has somewhat slowed. At the same time, if you look at the cost rows, yes, there is growth to be seen in a majority of the rows, and one exception there is with other operating expenses, where we actually have saved compared to last year 6 months, this year 6 months, over 1 million euro from 7.2 to 6.0. But the main growth and the main driver why the net profit has also somewhat decreased in this year 6 months has been net loss allowances on loan portfolio, and the growth there has been quite big. But the good news for us is that this bigger growth there actually came in the first quarter in 2024, and actually in the second quarter the situation stabilized. Also, of course, we haven't yet released our third quarter results, so no news there. But we have released our July and August financial results, and from there you can also see this trend, what started in Q2 regarding loan loss allowances have been there as well. So all in all, the profit figures compared to the start of the year are improving. Yes, we are still behind the 7% compared to 6 months last year. Last year's 40 million and a little bit above result was actually a very strong number, and it is probably very difficult to reach this figure, but we definitely intend to make even stronger second half of this year regarding net profit compared to the first 6 months. If we now move on to our main figures in our balance sheet and also some important ratios, I would not go over all the rows here as well, but highlight the most important ones. Like we already saw, our balance sheet volume has grown from 1.6 billion in the end of 2022 to 2.6 billion after 6 months of this year. And our loan portfolio has grown throughout the years, with 1.5 years from almost 4 billion to 1.9 billion euros. At the same time, deposit portfolio has grown even more, from 1.4 in 2022 to 1.9 already end of last year. And by the end of second quarter this year, it is already above 2.2 billion euros. Yes, the growth numbers are big and they continue to be big. We can see that considering the comparison of last year's end of second quarter to this year's end of second quarter, the growth in loan portfolio has even been 27%, which is even bigger than the full year growth of last year, which was 23%. And our asset volume or balance sheet volume has grown even more. So we have reached this 2.5 billion milestone indeed. The growth has been 37%, and it's very close to the previous year growth of 39%. And this has come from the fact that on top of our loan portfolio, also our, let's say, liquidity portfolio has grown a lot and has helped us to grow the total volumes of assets because of that. If we now look at the table below, the ratios, I would highlight here the return on equity, which is also our strategic goal. According to our strategy, we want to achieve in long term 20% return on equity, which is, of course, a very high target, but we have a strategy to reach that. But end of last year, we ended with 17.7% return on equity, and this year, 6 months, it has dropped. Reasons are pretty much the same I covered in profit and loss statement. With 12.7% in 6 months is definitely the figure we want to improve in the second half of this year. But still, it means that even at such return on equity, which is considering the market averages in Europe, which is pretty okay one, we earn decent amount of profit continuously. Now let's dig into our loan portfolios and deposit portfolios in more detail. From the bottom left side of the screen, you can see a pie chart which shows geographical distribution of our loan portfolio. Our main markets, you can see Estonia with 42% and Lithuania with 35%. Next comes up Latvia with 15% and Finland with 7%. Sweden and Bulgaria have only marginal relative sizes of our total loan portfolio. If you look at the middle graph or table in the top side of the screen, where you can see the distribution between retail and corporate banking customers, it is roughly 2/3 in retail and 1/3 in corporate. Our highest growing business lines are both corporate and housing loans. So both retail and corporate are this far increasing, and the rate is therefore pretty much now stabilized. And if you look at the third graph in the top half, you see the pie where you can see the collateralized and not collateralized distribution between our loan portfolio products. And this is constantly increasing, constantly increasing the size of real estate secured loan portfolio. It has reached 57% by the end of second quarter this year. So both products, corporate loans and housing loans, mainly distribute to this side of this pie chart. On the bottom row, you can again see one graph regarding our total loan portfolio growth, where you can see that this growth from the end of last year to this year from 1.68 billion euros to 1.93 is 15%, but this is only a half a year growth, so it is relatively still, again, let's say in the same size or even higher when compared to last year full year growth. And now if we look at the bottom half right side graph, you can see the loan portfolio quality chart, where you can see different in delay groups loan portfolio sizes of a total loan portfolio. Yes, by the end of last year, the in delay portfolio have grown compared to 2022 end of year results. Now in 6 months 2024, the total in delay portfolio relatively hasn't grown that much anymore and has rather stabilized. But indeed, there is a case that over 90 days in delay portfolio has grown from 1.8 to 2.7%. And this is also a main reason why our loan loss allowances have also grown this year compared to last year. If we move to deposit portfolio, you can see on the left-hand side the distribution between term deposits and saving deposits. Saving deposits are deposits which are basically at any moment can be ended by our customers and money taken out. Yes, there is a 3 days payout period for us to do the transaction if a customer requests so, but basically asking the payout to be done in 3 days, savings deposits will be paid out. So it's a rather or even very flexible product for savings for our customers. And you can see the dark blue side of the deposit bars are covering the savings deposit. So in 2023, the main growth in deposit portfolio came from the saving deposit side. 63% was the total growth rate for savings deposits, and only 24% was a growth rate in term deposits. And now looking the results comparing end of last year with 6 months, ending 6 months this year, you can see that now the growth has more come from term deposit side, 27% growth from 0.9 billion to almost 1.2 billion. And savings deposit have grown 7%, almost to 1.1 billion. Why customers are more right now this year choosing term deposits? Pretty easy explanation. The interest and rate environment is what you know, rates are dropping, and customers want to fix for at least some short period their deposit rates what are interesting from them. So many of customers who always choose before, for example, savings deposit products also put the money right now in 3 or 6 months term deposits in our own bank. If you look at the geographical distribution of our deposit portfolio, you can see that majority of deposits come from 2 countries, 46% from Netherlands and 35% from Germany. This is above 80% a little bit. This is a quite big part of the total deposit portfolio, of course, but it hasn't, their share of the total deposit portfolio hasn't increased this year. This year we started to offer the deposit products in all of our countries where we offer loan products. So we are getting there, adding more deposits also in our loan markets and giving a little bit more share to our total deposit portfolio in Estonia, Latvia, Lithuania, and Finland and Sweden and Bulgaria as well. From our loan countries, you can see 8% there is a Finland share, so it is the biggest deposit market, which are not cross-border markets for us. Deposit breakdown by maturity, you can see that yes, savings deposit almost 50% of total deposit portfolio, and then additional, let's say 27 plus 7, almost 1/3 of the portfolio is below 12 until 12 months of maturity. So all all the term deposits until 1 year maturity is 1/3 of our deposit portfolio. And the remaining part is for deposits with longer maturities. With that, I will conclude my overview of financial results and give word back to you, Martin.
Thank you, Argo. And if you have any questions to Argo regarding some numbers he presented or what you feel you would like to know more, then feel free to ask questions. We will answer the questions at the end of the presentation. But now let's continue with Bigbank strategy. We have the strategy in place 2022 to 2026. Our strategy is based on the goal that we are growth-oriented, customer-focused bank, which aims for 20% return on equity, as already Argo also mentioned. If you look at the numbers, then I believe also our recent numbers have proved that the strategy regarding growth is working very well. And how we have achieved this growth, of course, has been the focus to our customers. If we now look to the 5 pillars down here, then let's start from the left. And the first pillar of our strategy is that our growth should mainly come from the housing and corporate loans. And why from these products? It is for the reason that these products usually have longer loan terms. And thanks to it, it helps to bring long-term interest income. And of course, larger loan sums with longer periods help to run the bank efficiently. Because if you look at consumer loans, then even usually if we give them out between 5 to 10 year period, then they are often prematurely repaid. 3 other main pillars of the strategy. First of all, we want to take into use the internal risk-based approach for the capital requirements. We do have real estate investments which should support the capital increase and create synergy, and we want to enter the daily banking. If you now talk maybe a little bit more detailed way, what is the key cornerstones to enable the growth in the corporate loans and in housing loans, then what we do believe in is that the customer should be provided with reasonable product conditions. And it doesn't mean that the reasonable conditions are only interest rate, but it is also the full package of the loan conditions, the small print, that it would be according to the project, according to the customer, to enable the customer to fulfill their needs. We also do search for underserved customer segments, so that maybe there is some risks which we could understand better, where we could find a better solution for the customer. And for that, we want to be the risk leaders, but it doesn't mean that we want to take highest risks on the market, but rather where we want to concentrate is that we would be better than our competitors regarding understanding the risks of different customers, different projects, and also the ways how to mitigate them. And if you talk about housing loans or corporate loans, then we cannot forget the human touch of it, because in these both of the products, usually the customers need and want also consultation, and we do believe in a fast and competent service there. If you talk about our consumer lending business, then this is actually very much automated. Now, going to the IRB topic, or the internal risk-based approach. What is it? It is the way how you allocate the capital to your credit portfolio. Today, we use standard approach, meaning that similar loans in similar customer segments have certain risk weights. If you talk about internal risk-based approach, then it means that the loans given out are given individual risk weight based on the customer, based on the loan, based on the loan collateral. So each and single contract has its own risk weight. For that, we need to set into place, of course, the system, how to do it. But also what is very much important is that why we want to do it is that we do see that when today we use a standardized approach on the credit portfolio risk weights, then we use more capital than we could use for servicing the same amount of portfolio if we would use IRB. So it would give us the capital release. And of course, if we have less capital needed for the same amount of portfolio, it is also one opportunity to how we can increase the capital return. And the other good point of it is that in order to get such kind of improvement regarding the risk weights, you would need to have a good quality portfolio and you need to keep it in a good quality. So it also for the longer term helps to sustain or put strategic goals on what types of customers you want to finance, what risks you want to take, and how you mitigate them. If you talk about our third pillar, the real estate investments, then as previously said, they are mainly in two categories. One is different rental real estate, office buildings, some shopping premises, where we do look for long-term strong cash flow, which would also ensure us expected capital return. If you talk about agricultural land investments, then in these places we look for the long-term value increase of the collateral, or meaning the land itself. And we also do consider investments into green energy, but today mainly it is related to the lands what we own and the possibilities to build on these lands windmills. We don't expect to build them ourselves, but to partner with the energy producers to rent the land out for them in order to them to have a place where the windmills could be placed and to share some kind of revenue. And in the real estate investment sector, we are not based only on Bigbank's own financing, but we also use the financing from other credit institutions. So meaning that in these terms, we are sometimes also the customers of other banks ourselves. Last pillar in the white entrance to daily banking, why we want to do it is that we want to improve the marketing efficiency, tie the customers better with us. And of course, we want to improve the financing cost. If you look at the moment, Bigbank's financing, then as Argo explained you, it is mostly built on term or saving deposits. And we do pay considerable interest rates to our customers. Now, if we talk about the demand deposits or the money which is on the accounts of customers, then, for example, if you bring Estonian specific example, then in Estonia, there are like people who hold around 8 billion euros on their demand deposit or current account, where they are basically paid no interest or very small interest rate. And we do see opportunities to, from one side, to also gain access to the cheaper financing ourselves, but at the same time to also provide the customers more than they are getting today. And for that, of course, we need to build up the specific product portfolio. I can say that today we are internally with some of the payment products in the test phase. And also we lately joined directly RT1 payment system, meaning the instant payment system. So we are able to provide our customers instant payments. And as mentioned before, we have also today already credit card customers, and those customers are using the credit cards quite actively. So in second quarter, we had more than 80,000 credit card payments made. And if we now look in this green pillar, then these are some supportive topics, what we do believe in. So if we talk about how we keep and attract people, then we do it through great leadership and supporting their personal growth. I believe in Bigbank, if you are motivated, if you have skills, then we have wide opportunities to realize yourself, to build new products, to do new things. So there are a lot of opportunities as we are a very fast-growing bank. The organizational culture, what we want to build and have is, of course, focused on the sales and business, where is high banking competence. But we believe that sales and business, of course, are very important because the banks are regulated institutions, licensed institutions. But at the end of the day, why we need banks is we need places to hold money somewhere, and we need places to lend money from. So at the end, it is the business activity the banks do. We care a lot about our brand, and we also measured the recommendation index of Bigbank, and we compare it also to our peers in order to enhance our customer service even further. Mainly, we have grown organically, but we do consider also mergers and acquisitions. Today, they have been mainly done regarding real estate. So we have bought different real estate objects or agricultural land. But why not at some moment also some possibilities in the financial sector itself. Regarding product setup, during last strategy period, we built our own banking software Nest. And as it is now launched and we are working on that in all the countries of operations, then it is also very easy for us if we have built up a new product to launch it in the next market or on the, like, for example, we develop something for Estonia, and then it's much easier to scale it to, for example, Latvia or Lithuania after that. We do use lean methodology and technological solutions to develop the processes that improve our employees and customers' experience. Regarding climate neutrality, we take it as an opportunity, not a restriction, and we are very much focused on the cost efficiency because this is the way how we could improve the return on equity. So this is the quick look to our business strategy. If you have any more questions to me later on, I am glad to answer, but now I would give back the word to Argo to talk about our bond terms.
Thank you, Martin. Let's go over the terms indeed. This is, as we started the presentation, third series of our last year issued a bond program. 30 million is the total program size, and the third series size is 3 million euros with an opportunity to increase it to 8 million euros. So it can be increased by 5 million euros. Let's go first over the things what have not changed compared to the previous series. We have still 1,000 euro nominal price for one bond. We still have quarterly payments on 15th of each month of quarters last month, meaning December, March, June, and September. First payment for this specific series is already 15th of December this year. And it is still with a 10-year term and the possibility or opportunity to early redeem the bond after 5 years. This early redemption can be done only with an approval by Estonian FSA, but this is the possibility for Bigbank to do it if FSA approves that. So for investor, it's basically at least a 5-year bond, but it can be a bond with until a maturity of 10 years. We started the program subscription, not program, but serious subscription period yesterday on 8th of October. And it is, you can subscribe bonds until next Friday, 18th of October, 3:30 at the time. And now we can move to the maybe most interesting part, the interest rate of our new bond. We set it at 6.5% annual rate, and it is reducing from the last series of 7%. Why we still believe this is interesting and good price to right now to consider to make an investment in is that actually the interest rate environment has changed throughout this 5 last months as well when we conducted the second series issue. So Euribor rates, for example, have decreased 0.7% by that time. ECB has done 2 cuts in the rates in exactly 0.5 total with these 2 cuts. And also all kind of deposit rates have dropped throughout this period. Yes, compared to some other players, it may be lower, but for example, compared to Estonian government bond, which was issued not so long ago, it is quite considerably higher. Of course, Estonian government, Bigbank, and all other market players have different risks, and all investors should consider these, read the program, and make their final investment decision themselves. But we do believe that offering 6.5% for at least 5-year term in today's environment when interest rates are constantly dropping, and at the same time Bigbank shows decent growth and profitability figures is definitely an opportunity to think about and make a decision after a good thinking round. Why we at all issue this bonds and how do we use this? Basically to ensure that our strategical growth plans can be done. Yes, it goes strictly to our loan portfolio growth, and this is exactly related to our strategy to include bonds and increase capital to allow us to increase the loan portfolio, especially on our main strategic products, housing loans and corporate loans. With that, I conclude my introduction of the series. If you have any questions, please ask them. And I will give a word now back to you, Martin, as well, to give some final words.
Thank you. But I believe we have come to the end of the presentation. So now we're open for the questions.
Thank you. I will jump in now. As Martin and Argo mentioned, we are now proceeding with the Q&A session. So please, everyone who do have any questions, submit them using the Q&A box underneath the Zoom in the menu. Unfortunately, or fortunately, as Martin and Argo have done a wonderful presentation, we have not received any so far, but let's give a minute or so to think about it, and we will then proceed. Okay, it seems that no questions are submitted so far. So I kindly remind you that if you still have any questions to the company, please feel free to approach Bigbank individually by sending an email to investor@bigbank.eu. And the recording of the webinar will soon be also available online on Nasdaq Baltic YouTube channel. And please follow Bigbank announcements to stay up to date with the company's news, or visit Bigbank's investor page, investor.bigbank.eu. And now, final words from Martin and Argo.
Thank you all for participating on today's seminar. If you make an investment decision, please base it on the prospectus, its amendments, which are available on investor.bigbank.eu. And if you have any questions to me, Argo, or more general questions regarding the bank, please submit them through the email, and we are more than glad to answer. So thank you for participating.
Thank you for participating, and looking forward for your questions.